Tonight, many of America's farmers already feeling the pinch are worried about the possibility of more challenges.
And we're going to lose another generation of farmers.
What would happen to your farm and to your business if they are all sent back to their home country?
If that would happen, I'm out of business.
Have you ever wondered why your local feed mill is awash in American wheat nobody wants? Did you notice Philippine buyers walking away from U.S. tenders in favor of Canadian grain? And what happens when a country once commanding 35% of South Korea's market slumps to just 17%? Welcome to the biggest upheaval in global wheat trade in decades. U.S. wheat shipments are being rejected, and buyers are flooding Canadian markets instead. The crisis began in the 2024-25 season, when global wheat trade volumes plunged by 9% year over year. American farmers, who exported over 25 million tons in 2023, suddenly saw their market share evaporate. In the Philippines, projected imports fell from 7.2 million metric tons to just 6.8 million, prompting Manila to scrap a 65,000-ton U.S. tender in May 2025 and replace it with 110,000 tons sourced from Canada and Australia. That one cancellation alone cost U.S. growers over $240 million in under 2 months. South Korea delivered an even more devastating blow. Long a loyal American customer, Seoul cut U.S. wheat's share from above 35% in early 2024 to below 17% by mid-2025. The tipping point was glyphosate residue. U.S. samples routinely tested at 200 to 400 parts per billion, far exceeding South Korea's new 30 parts per billion safety limit. By contrast, Canadian wheat averaged just 30 to 70 parts per billion, enough to capture over 60% of Korea's imports in 2025. Spokane's largest milling plant responded by slashing capacity 20%. And regional elevators in Washington state now report surplus stockpiles swelling by 36%. Across the Atlantic, U.S. wheat imports into the European Union plunged to a 20-year low, particularly in France, where domestic output fell 20% in 2024. Canada's share of EU wheat jumped from 7.4% in 2018 to nearly 17% in 2022, and climbed further in early 2025, thanks to CETA's streamlined customs and Canada's reputation for consistent quality. Italian pasta producers, demanding perfect semolina, imported a record 1.09 million tons of Canadian durum in just 8 months of 2022-23, spending $534 million and relegating U.S. exports to a mere 15% market share. Mexico, once a top U.S. wheat partner under NAFTA, curtailed American imports by nearly 40% in 2025. Frustrated by inconsistent regulations, paperwork delays, and unpredictable port schedules, Mexican buyers pivoted toward Canada's reliable supply chains. They now plan to import 400,000 tons of Canadian durum in 2025 to 2026. A dramatic shift for a country so geographically close to U.S. silos. Domestically, these shifts have created a glut. March 2025, inventories reached 1.24 billion bushels, up 14% from 2024, the largest March 1st holdings since 2021. Farmers cut planted acreage to 45.35 million acres, the lowest since 2020, canceling seed orders amid bleak pricing and unsold stock. Season average farm prices slid to $5.50 per bushel, making U.S. wheat the cheapest globally, yet still failing to entice buyers deterred by delivery delays and quality concerns. This is not a temporary wobble, but a fundamental realignment. Canada ended 2024 as the world's third-largest wheat exporter, with 25.6 million tons, surpassing U.S. exports of 22.7 million tons, while Australia also surged to a projected 24 million tons. As American farmers grapple with mounting storage costs and shrinking profits, they face an urgent question: How can they rebuild trust, improve compliance with stringent glyphosate standards, and reclaim lost markets before this crisis becomes irreversible? Before we dive back in, please hit the like button. Your support fuels every story we share. We're aiming for 5,000 subscribers on Global Insight, and your subscription would mean the world to us. Thank you for helping us grow. Now let's continue.
USDA says the number of wheat farms in the country has declined by more than 40% in the last 20 years.
While Canadian fields hum with exports, U.S. grain elevators echo with emptiness. Record stocks have forced farmers into drastic measures. In Kansas, storage fees doubled as silos brimmed past capacity. In South Dakota, half-harvested fields were left to rot when crews chased work elsewhere. With inventories on March 1st, 2025 at 1.24 billion bushels, up 14% year over year and the highest since 2021. Growers slashed planted acreage to 45.35 million acres for 2025, the smallest wheat footprint since 2020. What once paid the family mortgage now sells for a season low $5.50 per bushel, even as Canadian wheat commands premiums for guaranteed quality. Global competitors capitalized. Australia forecast a record 24 million ton export haul, 26% higher than the previous season, filling gaps in Asia and the Middle East that U.S. suppliers couldn't reliably meet. Meanwhile, Black Sea disruptions trimmed Russian shipments from 55.4 million tons in 2023-24 to an expected 44 to 45 million tons in 2025, and Ukraine's exports stalled at 15.5 million tons due to constrained carry-in stocks. Yet Canada and Australia seized the opportunity, offering predictable contracts and transparent logistics that U.S. exporters failed to match. Quality compliance emerged as a battleground. In early 2025, South Korea imposed a strict 30 parts per billion glyphosate limit, upending long-standing tolerances. Fully 28% of U.S. shipments required port-side retesting, delaying deliveries by weeks and souring buyer confidence. Canadian producers, under the 2023 Clean Farm Transition Program, slashed glyphosate usage by 45% across the prairies. Saskatchewan University's drone-guided application pilot achieved 90% residue control accuracy. The result, 0 retests for Canadian wheat shipments to Seoul in 2025. In the EU, French mills rejected U.S. deliveries that failed to meet carbon residue standards, newly enforced under the Green Agricultural Pact. After France's own production fell 20%, importers turned to Canada, whose exports to the EU surged by over 40% in early 2025. Italy, demanding top-tier durum for world-renowned pasta, quadrupled Canadian imports to 1.09 million tons in 2022-23. By 2025, mid-2025, Canadian durum held nearly 45% of Italy's market, forcing U.S. suppliers, once accounting for half, to the sidelines. Mexico's shift reflected more than price. In 2024, Canada's $72.5 million wheat exports there hinted at diversification. By 2025, U.S. shipments plunged 40% amid paperwork snafus and erratic inspections. Texas flour mills ceased operations, and Arizona farmers sold at 20% discounts to offload unwanted grain. Meanwhile, Canada's exports to Mexico rose 37%, buoyed by CUSMA's streamlined rules and transparent traceability that U.S. counterparts couldn't replicate. This wholesale realignment carries profound consequences. With global wheat trade forecast at 207.3 million tons in 2024-25, a record 16.8 million ton drop. Each lost sale intensifies pressure on U.S. farm incomes. Commodity analysts calculate billions in foregone revenue. Every 1 million ton loss equates to roughly $550 million at current prices. As U.S. wheat slides to 22.7 million tons in exports, behind Canada's 25.6 million and Australia's 24 million, It risks ceding permanent ground in markets long held. Farmers, facing this existential threat, discuss bold remedies, targeted government grants to retrofit grain handling infrastructure, diplomatic missions to re-establish trust with key importers, adoption of precision ag grants to elevate U.S. residue controls to Canadian levels. Yet these proposals arrive as veteran growers retire early, and younger generations pivot away from a crop whose future appears bleak. By mid-2025, the full scale of America's wheat crisis has come into sharper focus. U.S. farmers are drowning in unsold grain. Rural banks are tightening credit, and millions of bushels risk spoilage in crowded silos. Yet the fallout extends far beyond supply chains. It threatens the very resilience of agricultural communities that have powered this nation for generations. In the Great Plains, where wheat once symbolized stability, county extension offices now report a surge in drought and doom loan applications. Nebraska's largest co-op warned that without federal intervention, up to 30% of its member farms could face foreclosure by the end of the year. Kansas grain elevators, built for busy harvest seasons, now operate at just 60% throughput, turning off lights and laying off staff until demand recovers. Tractor dealers lament declining service contracts, and seed sales have fallen off a cliff as growers pause replanting decisions amid financial uncertainty. Beyond immediate losses, U.S. wheat's reputation has taken a hit. Importers in Asia and Europe now equate American wheat with unpredictability, political shifts, port congestions, and compliance hiccups. That image contrasts starkly with Canadian wheat, now synonymous with reliability and rigorous quality controls. Market analysts warn this perception gap could endure, making it far harder for U.S. suppliers to win back contracts, even if they address technical shortcomings. Despite the challenges, there are pathways to recovery if industry and policymakers act swiftly, strengthen compliance infrastructure, fund expanded testing labs at key export ports to match Canadian residue control standards, ensuring U.S. shipments clear safety checks without delay, revise trade diplomacy, launch targeted missions to re-engage major buyers, South Korea, the Philippines, Italy, with transparent supply chain commitments and flexible contract terms that rebuild trust. Incentivize adaptive production. Provide grants for precision ag equipment, GPS planters, drone sprayers, to reduce residue risk and boost consistency, narrowing the gap with Canadian yields. Enhance port efficiency. Invest in rail-to-ship logistics and digital tracking at Gulf and Pacific ports to eliminate bottlenecks that add days to shipping schedules. If implemented before the next harvest, likely within months, these measures could stem the tide of lost market share and signal to buyers that U.S. wheat can again be counted on. This wheat debacle underscores a stark lesson. In today's hyper-competitive global markets, price alone won't win contracts. Reliability, quality, and policy stability matter just as much. Canada and Australia demonstrated that foresight and long-term planning can vault a nation to the top of export rankings, even when it means outpacing a giant like the U.S. For American growers, the path forward demands concerted action, both at the farm level and in the halls of government. Without it, the fields that once symbolized American abundance risk becoming cautionary tales of missed opportunities and eroded trust. If you found this deep dive into America's wheat export crisis eye-opening, click the video on your screen now. The Silent Boycott: How Canadians Quietly Withdrew Billions from U.S. Stores, to see how consumer shifts and cross-border dynamics are reshaping entire industries. Join us there for more insights into the economic forces that touch your life.